Justin Trudeau has potentially put out one of his dumbest pieces of financial media yet. He is trying to sling the capital gains tax increase even more, and at this point it feels like he's not a serious politician. It feels like he's trying to destroy, he's trying to ruin the reputation Canada as it operates, because he knows he's not getting voted back in during the next election. That's why he's pushing it out as far as he can. He wants to make it a difficult job for whoever takes over so that they go, oh, maybe Trudeau wasn't so bad. He's going to have done so much damage by the time he leaves. At this point, it feels like it is intentional. So we're going to break down some of his numbers, show how he's lying, showing how he's misrepresenting, and just overall kind of a dummy. Then we are going to be getting into a BNN Bloomberg video, which is going to give us a financial update, how the market's looking, what's happening with rate cuts. And I think this is important information because it is stuff that will affect a lot of people all the way across Canada. But before we get into that, don't forget, I did open the Axe the Tax store. I do have it here. We have items. We have the hat, we have the mug, and we have the shirt, and we have stickers down here. Only order from the store if you can afford it. It's basically just about having fun, getting the message across. We know that axing the tax is really important. It's something that we need to focus on getting rid of for the overall cost of living of Canadians. If you can't afford it, don't worry about it. It's just about having conversations. Let's get into today's video.
This is a tax policy change that impacts less than 1% of people, but look at how much attention it's getting. Some people...
From the very first statement, it's a lie. We'll get into why it's a lie, but they keep saying that, like, oh, it's 0.13% of Canadians. Not true.
People don't think that the richest few should pay more in taxes. Well, I don't agree with that. At a time when the richest are only getting richer, I think it's fair to ask those people to pay a little more. You may have heard of the capital gains tax, or what some people call the capital gains tax advantage.
Yeah, there's some wordplay for you.
And if you don't know what that is, you probably don't get that advantage. It's basically where you've made enough money and amassed enough wealth in assets that you end up getting a tax break. Here's what I mean. Everybody pays taxes on 100% of their salary.
Technically not true. Again, misrepresentation. There's an allotted not-inclusion rate of 11,000, I believe, provincially, 15,000 federally. So if you're making, $50,000 a year, technically speaking, you could be paying, like taxes on around 70% of your income. It's not a huge deal, but the reason I pointed out is just how many inaccuracies are in this video.
If a nurse is making $70,000 a year, or an investment banker has a salary of $800,000 a year, when it comes to paying income taxes, they're both paying taxes on all of that income. Now, that nurse may be living a good life, but she's probably not earning enough to be buying and selling assets like properties. But that investment banker, who's making $800,000 a year, probably is.
Also misrepresentation. Guys, you can get creative. You can find markets that make it work. I am a real estate agent in London, Ontario. Reach out to me in the link below if you want to work with my team all the way across Canada. We can hand select somebody for your area. But more importantly, like, I've got clients who are nurses, who are in the trades, who work at the bank, not as investment bankers doing that, just in regular financial advisor roles, or people who work in support in the companies. All his thing is about class divide, getting people to not like each other, because he wants a divided Canada.
He's putting some of his money in assets, like buying and selling properties or shares in companies. This becomes like a second and sometimes bigger source of income for him. When that investment banker sells those assets, he only pays taxes on 50% of the profits.
He only pays taxes on 50% of the profits. God forbid somebody wanted to keep some of the money they earned in investing over 40 years.
He makes. Now, he's not paying 50% in taxes. It means that if he makes $1 million from selling properties or stocks, taxes only apply to $500,000 worth of it. So when all the math is done, that nurse is paying about 29% in taxes on her full $70,000 salary. But the investment banker, he's only paying taxes on half of the money he makes from selling assets.
Yeah, let's break down some of those percentages shortly, because that's hilarious. Oh, well, she pays taxes on 100% of her salary. Well, it only breaks down to, whatever it was, 29%. He only pays on half. It breaks down to 26.8%. But we'll get into the real numbers that he's misrepresenting because it's hilarious.
That's the capital gains tax advantage. And it's not really fair. So we're going to change that. Starting June 25th, If someone makes up to $250,000 in capital gains, they're still going to pay taxes on only half of that. But for anything they make over $250,000, they're going to pay a little more. They'll pay taxes on 2/3 of that. So the very richest people are going to profit a little less off their assets. Only 0.13% of Canadians, to
Wrong.
be exact.
To be
These are
exact.
people-
To be exact. That's why I'm so angry, because he is saying it's only on that to be exact. Well, guess what? 11 million Canadians own some sort of income property. It could be a cottage, it could be an actual investment property, it could be anything. That's 11 million Canadians. That's a lot higher than 0.13% or 0.013%, whatever nonsense number he's saying. That's not including people with stock portfolios. So that 11 million is obviously much higher. This could be affecting up to 40% of Canadians by the time it's done when you include all this stuff. Maybe even 50% of Canadians when you include all levels of investing, assets, everything that it is. So the number he's given is psychotic. It is so wrong. And he likes to talk about fairness. So let's break down some numbers that has to do with fairness. Shall we, Trudeau? You dummy. Let's get into it. So what I did here is I did an income tax calculator to calculate everybody's tax burden based on what Trudeau was saying. Oh, look, we have the nurse here. I started with the nurse who's making $70,000. I'm going to use Trudeau's numbers exactly because I want to show how much he's misrepresenting this, because this is so frustrating. Okay, so $70,000 for the nurse. The total tax for the nurse is $17,090. Okay, that is, in my opinion, still too much. But and he is right. Okay, there you go. 29% of tax rate. Okay, cool. Stick with me. I swear these numbers are staggering. Here we go. Again, using his investment banker tax rate, we have the $800,000 income, $390,730 in taxes in 1 year. So if we're going to get into the argument of fairness, this person has now a marginal tax rate of 53.53%, and they have paid $390,730 in taxes in a single year. So if we do the math, that is the same amount of taxes as 23 working years of a single nurse. Okay, so in 1 year, this guy, whoever, pays 23 years of taxes of that nurse. So again, I'm not here to defend the rich, but if we're talking about fairness, and if people are paying taxes, this person has now paid 23 years worth of a nurse's taxes, okay? So that is crazy difference, 23 times per year of, so what I wanted to do is show how much this person pays. And again, I used the 800,000 number, then I used his $1 million example on if they made $1 million, what they'd pay in capital gains on top of that. So it is a total tax burden of $744,025 on that single year that they sell for that $1 million. And I understand, again, people are going to say, well, they made $1 million, blah, blah, blah. But keep in mind, they're now paying 53.53% taxes to the government, who is not putting it into Canadians' pockets. It's programs that most of us are against, especially people watching these videos. So we know that money is being wasted. It's being taken out of the hands of Canadians. What happens? These types of Canadians are going to leave. They're going to stop investing in Canada, because why would you risk that amount of money being paid on years worth of work? Because the other thing, again, stick with me, this is not including inflationary over all of the years that they've held that asset. So that asset's been losing real value based on inflation. And then also the money that they bought the asset with was already taxed income. So they paid tax to buy a house or whatever it is, and then they bought it. Inflation ate up a lot of the gains over the time of that house, and then they're paying tax on the sale of the house. It's just tax, 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 tax. So why would people care about wanting to invest that? And again, I used the average tenure for both of these people. I used as if they had the both same working career, and this single person, who, again, I don't want to just defend the rich, but we're getting into actualities of real numbers and how big of a freaking dummy Trudeau is. This single person, who he's saying is not fair, over his single working career pays the same amount of taxes as 25 nurses, assuming he only has one capital tax year and not more. So if he has, that's maybe he sold his real estate, maybe then the next year he sells his stocks, whatever it is. So this example, just using Trudeau's numbers, he pays the same amount of taxes as 25 nurses, not 25 years, 25 nurses' entire career of paying taxes. So more taxes than 25 nurses pay in their entire life, this single individual pays. And that's why it is so frustrating to listen to this idiot, this absolute fool of a guy who spout off these numbers. I'm such a numbers guy, so when I see him getting into these crazy numbers, it just frustrates me so much. Let's let him finish up his stupid ideas.
Who have an average income of $1.4 million a year and are mostly in their 60s or older. So why am I telling you this?
Yeah, let's punish old people who have been working their entire life to save for retirement. Let's take it at the end. We'll give it to Trudeau and all his nonsense policies.
If the vast majority of you won't pay $1 more, well, for two reasons. First, the conversation always seems to be dominated by the richest people in a society. This is a tax policy change that impacts less than 1% of people, but look at how much attention it's getting.
Wrong again.
And second, you should care about your tax system. This change to the capital gains tax will result in almost $20 billion in new revenue.
Can't wait till that gets sent overseas or wasted on some monument or some sort of program that we really don't care about.
That will go towards the biggest investment in housing in Canadian history. Revenue that will create a national school food program, that will make prescription contraception and insulin available for anyone who needs it, that'll build a national dental care program. See, a fair system creates a fair country. And that's what...
Fair. Nonsense. I can't stand this guy because everything he's doing, one, we know the dental policy's not working. Two, the food program for kids. Why are kids struggling to eat? That's the question. Not is it good or not should we have the program. So this guy is an absolute fool. At least we have a level-headed guy on the next video. He goes on BNN Bloomberg and he gets real with some of his numbers. Let's get into it.
Well, Canada's job growth stunned on Friday, coming in triple what was expected, more than triple, in fact. And this had the market rethinking whether or not or when we might get rate cuts. Certainly it was priced in 2/3 odd that the first rate cut would show up around June. Now those odds are less than half. Our next guest says we should be seeing a rate cut in this country now. Jim Thornton is the chief market strategist.
We broke down those numbers in yesterday's video. The jobs report is nonsense. Let's get into it.
At Wellington Altus Private Wealth and joins. You don't often take the headline data. You like to get right into the weeds. So tell me, what's the data that you're looking at that informs the need for a rate cut now?
Well, I don't think 50,000 in part-time jobs is strong. I don't think 26,000 public sector jobs is strong. I don't think a labor market that can't keep up with Trudeau's immigration policy is strong. I don't see the wage inflation or the Phillips curve that everybody's talking about. I see a private sector buckling under extreme tightness of the Bank of Canada. And if we get some policy constraint from Ottawa, we're going to see a growth scare going forward.
And how many rate cuts do we need to solve that?
Well, that's a great question. So first off, the yield curve is inverted, more inverted in Canada than in the United States. So the Bank of Canada, if you use the 30 or the Bank of Canada overnights in the 30 year, 150 basis points just to get back so that it's not inverted.
Wow.
That is more extreme than the United States. So what I find interesting up here, or in Wall Street as well, is people think that cutting 25 or 50 basis points is going to do something. Amber, we're in your parents' backyard, it's in the summertime, we're playing with the hose, and we just kinked it so the water doesn't come out. If we just move it a little bit, it doesn't matter, right? Until the short end of the curve gets significantly below the long end of the curve, can credit creation get back into the private sector?
Are you talking about...
Credit creation is our money creation. I've talked about it in other videos. Like, we live in a debt-based money system, so all of our dollars have to be created through some sort of debt. And in this case, a lot of Canadians, it's often mortgages and whatever. So, people are taking on more debt, but unfortunately, it's not good debt, which weird term, but it's credit card debt's been happening right now, and that's not good.
6 rate cuts, if I did my math, we could do a quarter point every time.
So typically what happens is rate cuts, it takes longer for them to happen. And then when they do happen, because they are always late, they happen more aggressively and they go deeper. So I'm still going for a 2.5% Bank of Canada overnight rate by the end of 25. Yes.
By the end of
Wow, that would be big and nice for anybody who has a mortgage.
25.
By the end of this cycle, yes.
Does housing make you stop short at all on that? Because is that a complicating factor that you don't want to add more fuel to a housing market?
Rate hikes are causing shelter inflation in the country. Fine, let's leave that over there, and we've talked about that ad nauseum, you and I. What I find interesting is on the rental side, how the Bank of Canada thinks that keeping rates high solves the rental problem. In fact, it exacerbates the rental problem. Let's look at the building permits that just came out today, which are below historic averages. So where I'm at is I think the Bank of
Yeah, Trudeau's going to build 4 million homes by 2031, but building permits are absolutely plummeting, historic lows.
Canada has to leave the housing over here and look at the private sector and look at the long-term growth. I do not see any difference in this cycle than I did going into the global financial crisis. And if the Fed and the Bank of Canada do not cut now, it is going to get very painful coming down in the next couple of years.
We're not an island. We have to talk about it in context with the U.S., where the mantra is higher for longer.
Right. So what I think the big thing for me is, look, there is no relationship, there are no facts that support the straw man argument, the simple straw man argument up here, that the Bank of Canada cannot move before the Federal Reserve. There is no data that supports the fact that interest rate differentials affect currency crosses over the long term.
But it does.
I don't have data handy, but I've watched a few videos on it, and I've done some reading. It seems like there is data to show that if we have a big rate differential, that it would affect our currency. It seems like there's a lot of arguments for that. So I don't know. Maybe he's right. I don't know.
As perhaps at a moment in time, whenever traders decide that's the factor driving the currency.
Could be for a week or so, but if you go back and use monthly data, that I'm going to use a statistic. There is no R square. There is no relationship. And I could easily paint you a narrative where, because Canada is so much more interest rate sensitive, right? If the Bank of Canada cuts rates more aggressively than the United States, the dollar could go up because the economy would recover faster than the United States, because the United States on the private sector side is not that interest rate sensitive.
So the loonie.
That's an interesting point. We are way more interest rate sensitive. If our productivity went up and our economy actually went up, then it could make our dollar stronger. The issue is Trudeau's in charge, and he won't let our productive sectors of resources be productive and allow us to grow. So I don't know. This argument makes sense, but I just don't know if it's practical.
He doesn't plunge to a 50 cents. Say which
No, but you're right.
Yeah.
Could you get a knee-jerk reaction? Well, you watch the markets on a daily basis, sure, but over the long term. Well, let me put it to you this way. Interest rates in Europe are lower than the United States, but yet the euro trades at a premium to the US dollar. The yen, the Japanese yen, has had the biggest era of deflation or depreciation, and inflation hasn't gone up.
Yeah.
Don't forget, guys, we do have the Axe the Tax store in the description below. I am also a real estate agent in London, Ontario. Reach out to if you want to work with me or my team all the way across Canada. We can hand select somebody for your area. Don't forget to like and subscribe, and have a great rest of your day.